Well, hello folks, I'm LA Little and this is your daily TA wrap, where we take a look at these markets and we do it from a neoclassical perspective each time, asking ourselves what happened today. What does it tell us about the coming days? I do this show 4 times a week, Monday through Thursday, live at 9 o'clock Eastern Time here from the base of the rainy thunderstorm, hellstorm, Rocky Mountains. Folks, we got a pretty big one going on right now, so if we get cut off, you know what happened to me. It's been a strange spring. Actually, we didn't even have spring here. Stepped right into summer, and it's been a strange summer so far. The markets. What did we have today? Well, we had the Fed day. I know there were some worries about the Fed day. A few members had talked about it. I actually got a couple of emails from people asking questions about it. The media was kind of hyping it up, given the CPI yesterday, that maybe the Fed was going to do something, on the bad side. Not to be. It's the scenario in front of us is the Fed is going to keep talking down rates as long as possible. And their expectation, their hope, is 2 things. The economy starts to take off. Inflation stays reasonably low, hopefully for them. And the effects of the European easing and the continued pushing on rates by Japan continue to give us that backstop, if you will, to keep these markets higher. I mean, that is what they want to do, and if that can happen, and then if they can actually start increasing rates next year, what a perfect scenario, right? I mean, if you think back, this whole tapering thing has been a perfect scenario, right? In that they were able to pull this off with this long interest rates, we're going to keep them down forever kind of story. And they've been able to pull that off, and they've been able to take out this tapering without this market falling at all. The other thing that's happening with this market, as you know, is that you've got a situation where earnings keep coming in. Today you had FedEx, you had Adobe last night, FedEx today. FedEx was up 5-6%. The IYT, if you look at that guy, IYT had a nice bump today as a result of it. You can see the pop there in the IYT. And so, the Fed's getting exactly what it wants to get. So let's, and doing what it wants to do, and that is to keep this market working higher. And they say they don't target it, but that's nonsense. They do. Let's look at the ending numbers here. Industrial's up 98. The Russell here is actually a misprint on this quote system. This really wasn't up that much. It was up about 0.7. So we had basically straight across the board anywhere from 0.6 to about 0.75. The S&P was the leader today. S&P sets a new high, 1957 now, 15 points higher. ABCD structures higher, starting to come into play now as well. We had the S&P, let me pull back my quote system, not my quote system, but my charts here and see 2022 was the next number. The S&P on the monthly had a target of 1959. We're fixing to hit that. So that's about to come due. And then if you go back to the daily charts, you go up over 2,000. So big numbers. It keeps working higher. We've talked about the scenario of potentially this thing working higher into the end of the quarter. And with earnings next quarter, and those earnings that are coming out now continuing to push the expectations that they're going to be good, and you got into quarter performance anxiety, and now the Fed continues to say we're not going to raise rates anytime soon. Perfect scenario for a squeeze higher, and you started seeing it again today. So index is up pretty good. Gold was actually slightly down. But that gold setup actually looks like it's fixing to take off, and we'll look at that in a second. And everything else, bonds actually were up today, taking back some of those losses from yesterday. I think bonds are just going to drift around. I don't think they're going to do much of anything. And, all in all, exactly what you wanted and exactly what you think could happen is starting to happen. I didn't get my quotes in tonight. Let me see here right quick if they're coming in yet. They didn't, so let's pop over. I'm gonna use the stock charts as my ability to look at the three indexes. So the S&Ps, they get over the high. That swing point 1955.55. You get at 56.98. You do volume as you go over the top. That's a breakout. It's a breakout on volume. Let's look at the NDX next. NDX was also trying to break out. That prior high 38.04, I believe it was. Yeah, it was. You close at 461, and that's a new high. And that's also got volume. So you break out with volume, both the S&Ps and the industrials, excuse me, and the NDX. If we look at the, not the NDX, INDX, let's look at the, I think here is NDU. Yeah, so the industrial's coming up. The bottom of that high bar is 912, and we're just coming at it, and we've got volume coming at it. So that looks to me like it's going to go touch the top, if not break it. And then if we look at the last one that we can get volume on, the composite. Composite breaks over the highs, and it's over the last of the big bars down, and it's got volume. So composite, also ABCD structures in place and so forth, right? And you got, remember we talked about the nested ABCD structures? Well, they're there now, right? You've got this one that takes you up quite a bit higher, up into this range, and now you've got another one here that's going to take you up about the same amount. So they're going to play out to the top side. Those ABCD structures take you up to about 44.32. That's about 70 points away. So that's what it looks like from the charts. Let's pop over and look at the IWM so we can get a feel for what the Russell did in terms of volume. And the Russell doesn't quite have the volume, at least on the IWM. So maybe by the end of the night here we'll have the quotes and we can see what they are. It is a breakout though. It's got this big bar it's got to get over next, 118.12, traded up to 117.76. I would think it's going to attack that bar tomorrow. If we see that extension follow through, which is likely in the indexes, this one's going to get over that hump, and then you'll probably see it start to outperform again. So that's the Russell, and we'll see if we get the quotes by the end of the night. Before the show's out at least. Well, let's go back to the sectors because, excuse me, we actually had IYT we saw was starting to push higher. The SOX was a drag all day long. It did get a little bit of push at the end. SOX is nearing its ABCD structure. It's about done. On the daily, I think it is done. Let me grab the numbers here. 86.50, we're trading at 86.73. So on the daily, it's already done. And if we look at the weekly, it's about 89. So we could get a little bit more of an extension, but that ABCD structure that was in place on the daily chart has completed. And I'll have to figure out where it was again. Looks like it was from here. Right, that one's done. And so you've got the full extension on the SOX, right? You've got, and now if we take and think about this farther, you've got Apple has been paused, right? Google started to kick in today, but Google's got a long way to go. And Microsoft is at the highs and still struggling to get over them. So the big three in the weighting plus the SOX, that's about 60% of that index. And so with the SOX finishing up and without the others moving, the NDX is really going to have to get some serious rotation into that other 40% of it, and then these just hang, right, in order for it to push higher. Let's go over and look at the other sectors and see what they look like. So XLB pushes up, and last time we were talking about it, looked like it was done, it was going to push higher, and that's in fact what it did, going after the highs, coming at them with volume. XLE, and I haven't had a chance to look through these myself, so we're doing it together. This one also finishing up an ABCD structure, if I remember right. Let me pop over and see what that one looked like. That one measured up to about 100, and it's just about there. And it looks like it finished it off tonight. So you finished off an ABCD structure on the energy market. Pushing to the rest of these, XLF. So XLF coming back after the highs. Remember, this did a retest, regenerate, and is definitely regenerating back to the top side. XLI. This one, it tried to get to do a retest and never could get there. That's how strong these are. Here it goes back the other way, volume coming into it. So you're hitting the Thursday. Remember, the Thursday bar high was the bar a lot of these are measured against. That one's going to take it out tomorrow probably. XLK, the technology sector, back to highs, got volume. XLP. This one also had some volume coming in today and just blows away the swing point high. New ABCD structure on the way up. Goodness. They just keep coming, don't they? XLU. I saw some juice in this one today too. Look at this one. So XLU blows away 2 swing point highs. Right? Let me see what the weekly looks like on this guy. So we blow away 2 swing point highs, extensive volume. And on the weekly, you're blowing it away to, let me see, this is Wednesday. So Wednesday, we're doing 74. So it's about 25 a day. So it's going to be $1.25 onto 104. It's going to blow it away on the weekly and the daily. That looks to continue in a big way. XLV. Let's look at the healthcare. Now, the healthcare was still trying to do a retest and regen, and here comes the regen. Going back up, going to go after the highs. And finally, the discretionary also had done a full retest over the Thursday bar now and regenerating higher. So any way you cut it, it looks the same. Power move back to the top side. And, you know, I don't think you stand in front of something like this. Hopefully you've been listening to what I've had to say and hopefully been positioning for the potential for that big move to the upside, because it does look like it's trying to come. Let's go over and look at the ox markets. I talked about gold. First, let's start with silver though, because silver is the one that keeps telling us it wants to go higher. If we look at silver on a daily, this thing doesn't want to back off at all. It got over 2 swing point highs. Now it's going after the third one, and there's a fourth one up there as well. Coming into resistance zone today. I don't know if this thing's going to back off. And if I look at it on the weekly, that full retest regen would be up to here, 1948. So 1948 takes you over all those highs if it's going to make it, and it does look like it just wants to continue. So with that backdrop, if you go look at gold today, gold looks like a buy here. And it looked like a buy this evening after the market was closing. It was flat. Gold, 122.67. That high is 123.07. It came up, remember, it retested or tested into that regenerate area, tried to regenerate lower, but it can't. And the whole reason of bringing this up is if you go look at the gold stocks, they're telling you it's going higher. Gold stocks take out a swing point high, taking out another swing point high today. This one's going after the next one now. Got an ABCD structure to the upside. You know, so whether you want to get in the gold stocks, which are kind of extended already, or you want to get in the gold, which is probably going to be pulled higher by all of this, it seems to be taking place now. You got a nice move taking place here. Some of these gold stocks are really starting to move now. And I was wrong on this. I said I didn't think that they could take off, but they are, and they're doing ABCD structures on the upside now. So it's never too late to make a trade. There is a trade here. I mean, these extensions are going to be far if in fact they extend, and they kind of look like they're going to now. So, you know, nice big moves to the upside. Gold itself is going to be pulled higher because these are telling you something's happening, right? And the gold stocks, I think I did say last night, that if I were going to put my money somewhere, I'd put it in the stocks because the general market was going to help those pull higher, even if gold didn't want to. And that's exactly what you saw happening today. Let's see what the TLT looks like. Bonds pushed back up. They got pulled down yesterday. Oh, they got some volume today. Well, that certainly makes it more interesting. So they're going to test that again tomorrow at 112.54. So disregard what I said earlier in that they're not going to go anywhere, because you are seeing a nice extension here. So you'll get a test again tomorrow. If it can get over this, then the real test as to whether it's going to really go higher or not is that swing point high back there on May 2nd, 113.10. That would be the numbers at the top of this resistance zone. So it'll be a good test tomorrow. We'll see if they can get higher. You know, it's not unheard of that the market can go higher while bonds go higher. We'll see if today really gets extension follow through on the bonds or not. There's probably better bets if you're trying to make a trade, but you know, they surprised me there. They had volume. Dollar not doing anything. Let me see what the FXE is doing. So remember, the FXE has been pushed down as a result of Draghi and his crew. Okay, so that low, 135.02. Now this is an interesting setup. So you never got back up. You don't see this pattern very often, right? And the pattern I'm talking about here is you had a swing point low as a broken, right? And the break was here. And then you got the extension, right? More than 6 bars, and then it comes back up to test it. Well, it doesn't quite test it, but it has huge volume. And that was the Draghi day. Well, no, it wasn't. That was, what was that? Yeah, that was the ECB. That was the ECB day. So that swing point low, the retest regen still hasn't happened. So now you're seeing a push back up, and it's back into this big bar. This thing's going to climb right back up here and test it again and try to do that retest regen finally. And I wouldn't be surprised if it actually gets deep into there and makes everybody think that this thing is going to go higher, and that's probably going to be the short when it gets there, especially if it comes straight up. So that's going to be an interesting setup if in fact it plays out that way, because that's when you would finally get, right, a decent place to short this thing for a much longer term trade to the downside. You see what the weekly looks like. Yeah, so the 135 looks to be the number. Where's 135? Yep, right there. So it brings it right back into that. So that'll be curious to see how it plays when it gets there. All right, let's see if you have some questions for me. You can text me 303-912-9110. Send me an email. The email comes in at support@tatoday.com, or you can type it in up there in your chat box and I'll pick it up from there. I had one question texted earlier. Let me pop back in and see what that was. My mind's fading. I've forgotten. Let's see what we got here. Alright, so let's take a look at dry ships. So dry ships, short-term trade. Let's see what it looks like. So actually, let me put it. So dry ships is a shipper, actually kind of the go-to shipper when people think the sector is going to move, because it's the most common name there. It's been in a downtrend for seemingly forever. So let's see what they look like. Okay, so the push up on the daily had some volume, tested into it today, got over multiple swing point highs, and then tested right back into them. Did do a full retest regen. So you know, when you're trying to read the tea leaves, when you see this after a break of multiple swing points, that tells you it's a weaker position, right? That this thing has definitely been in a downtrend for some time. But the fact that it held on the full retest regen, which is what it did, right, and then gets a spike up above it, tells you that it's going to have a potential to move higher, right? And you've got an ABCD structure in place here that could take it quite a bit higher, actually. You go from here up to there and back down. So you got a fairly large ABCD structure potential in place. And that measurement looks like about, what is that, about 65 cents? So that'd take you up to almost $4. So let's look at the daily, the weekly. $4 takes you right to that top of that bar, is right at that $4 spot. I think you can get $4 out of this if it can get going. So yeah, $4 is on the table, and you don't have to risk much. So if you're in this thing, I just simply wouldn't give it anything below. Well, if you want to be safe, you could give it the bottom of this bar and then stop out underneath it. If you want to be more aggressive, then you'd give it the bottom of this bar, the June 17th bar versus the June 10th bar. So either of those two bars, you know, your probability of success is reduced if you're going to stop at that short. If you're going to give it more room, your probability is pretty high. Yeah, it looks like a decent trade. Let's see what else we got here. Nothing else? Okay. So the performance anxiety that I've talked about, let's think about how far it can take you if in fact it kicks in. Right? If I go over and I pull up my index projections, right, and I pull these over for you, you know, there's a lot of numbers up here that can go quite a bit higher. Now, this one had already finished, and you know, they're a little bit out of date, but you can see the IYT quite a bit higher. If I look at the XLF, this one actually starting up a new leg. So I'm going to have to draw in the new ones, right, because they're all higher now. The XLI actually has a higher one already still in play. And you just go across the list. I mean, they're big numbers on the way up, right? This one just fired today. The XLP is fired again. It's a nested one. The XLV potentially could fire. That would be 4. So you could see fairly large numbers, pushes to the top side. And then if you take the indexes and you look at those numbers, I mean, if we just go back, and I'll pull up the SPY since we'll have volume on it today. You know, if you do the ABCD structure off of this SPY, you've got this low, 186.48, 186.48 to the high, back down and up, right? So if you do that measurement, that number 186.48, is that really 10 points? 186.48, it is. So almost 10 points, 9.5. Added onto that, that takes you to 202.60. 202.60 is, you know, that's huge. From here, it's huge. It's another 10 points up. I mean another 6.5 points up. So you can see, and it can do it within the next week and a half if it really starts to take off. And right now, it does look that way. So if you're on the wrong side of this market, you ought to rethink your position. If you're on the right side of it, don't get too antsy to sell out. And if it does give us another chance to add some more, then you add some more. But it does look pretty strong here. All right, I guess everybody's mesmerized by a market that just never wants to quit. You know, at some point, and actually I'll bring in one more thought here while we're on this. And let me pull back over real quickly and grab my general markets. And I'll just pull up the SPY on this because it doesn't matter which one I do, because I want to pull up the trading cube. If you look at the cube, you know, we've talked about already before that we could get a move up because the short term wasn't that overextended, and this is the most extended of all of them. As a matter of fact, let me bring in the trading cube from this direction because we can actually get projections on it. And so if we bring in, we'll do the SPY again, and then we'll maybe look at the cube, the Qs. So 51.6, and if we tap on that number so we can see how far, that's 26 bars into the move already. Nosebleed is about 70. So we're 26 bars in, that's 39 bars. What is that? Magically, it's 13 bars. How many more bars are in this month? Well, it looks like about 9. So you can see how they can take you right through the end of the month, straight on up, right before it ever really gets to the point where it's extended, as it already is on the longer term time frames. Let's look at the Qs and see what they look like, right? And I think you're going to see this one is less extended, and it is 32.7. Where is that? 17 bars into it. Where can that go before it gets really extended? 39, right? 39 here, we're 17, that's another 22 bars. 22 bars takes you into the middle of earnings season. So if you catch what I'm doing here, you know, you can see where I'm going. And that is that, yes, we know we're extended. Actually, I want GSPC. We know that we're extended on, and here's the S&P 500, right? 38. It's just like the Qs, right? That one takes you up another into the middle of the next month. We know we're extended on these other time frames, right? We've been extended. We tried. This market tried to give us a reset over and over and over for 2 months and couldn't quite do it. And here we are again pushing to the top side. Folks, if the market wants to push, the market wants to push. We are in extraordinary times. These are not normal times. They haven't been. They haven't been since 2006. And I say that because that extraordinary run at the end, right? 2007 is where you started to see the turn. 2006 was just like now, straight up. And we haven't seen anything ordinary since then. This is 2014. This is 8 years of this stuff, right? With a huge spike down and now a huge run back up. Nobody could have anticipated what you're seeing in terms of a long-term perspective prediction. There's no way. What matters, folks? What matters is the day-to-day. Right? Because if you're on the right side on the short-term trades, you will be where you need to be on the long term. And until we see this break down, right? Until we see this break down and come back the other way, it just doesn't matter. Right? It honestly just doesn't matter. You stay with it as long as it wants to go. When it gets dangerous, you get safe, or you get safer. And if it doesn't want to turn, you just go with it again. Folks, thanks for joining me. Have yourself a great night. Glad you could be with me tonight, live at TA Today. Have a great night. Tell a friend, tell two. I'm LA, and this is and was your daily TA Wrap. Have a great night. I'll see you next time. Good night, folks.